Good afternoon and welcome to the annual general meeting of your company. My name is Penny Freer, the Chairman of the Board of Directors. It's now noon, the time appointed for the AGM. May I introduce my board colleagues, James Agnew, Pam Garside and Ian Spence. Also present is Emil Gigov, a partner of Albion Capital, who will join us shortly to give a presentation on the company's results for the year ended 30th of June 2022. Will Fraser-Allen, Managing Partner of Albion, will be joining us later. The quorum for the AGM is 2 members. This has been met and therefore I declare the meeting open. The notice convening the meeting has been in your hands for the statutory period, so I'll take that as read. Due to the success of last year's virtual meeting, and in order to maximise the engagement of all members, the board have acquired the services of Lumi to broadcast this year's AGM. Lumi's online platform enables members to participate fully in the meeting, including a question and answer session and real-time voting on the board's proposed resolutions. Before we move on to Emil's presentation, I'd like to take you through the poll process. The resolutions will all be voted on by way of a poll, taking into consideration the votes that have already been received in respect of members' proxy votes that have been verified by the registrar Computershare. If you've already cast your proxy vote with Computershare, you don't need to vote again on the poll unless you wish to change your vote. I now declare the poll open. The list of resolutions will automatically appear on your screen, and you have 3 options for each resolution. You can vote for or against the resolution, or you may withhold your vote. Once you've selected your vote, the option will change colour and a confirmation message will appear to indicate that your vote has been cast and received. There is no submit button. To vote on all resolutions displayed, select the Vote All option at the top of the screen. And if you want to change your vote, reselect your choice. To cancel your vote, select the Cancel button. Now moving to the main business of the meeting. Following the manager's presentation, the directors and the manager are happy to answer questions from members about the presentation or the proposed AGM resolutions as time permits. However, please be assured that all relevant questions will be responded to. And I'd like to thank members who've already submitted their questions and queries through to the chairman email address. If you wish to ask questions during the meeting, please select the messaging icon from within the navigation bar and type your question at the top of the screen. To submit the question, click on the arrow icon to the right of the text box. I hope all that's clear. I'll now hand over to Emil for his presentation. Emil, over to you.
Thank you, Penny. Good afternoon, and thank you to everyone for joining us at this annual general meeting for Crown Place VCT. May I have the first slide, please? I have a presentation to share with you, and the presentation will cover these items, starting with the financial highlights, the background to the year, the track record of the Venture Capital Trust. This is all just to set the scene, and then go into a bit more detail around the highlights in the year, the investment portfolio, including realizations and new investments that were made during the year. I'll speak about the investment strategy, which hasn't changed during the period, but it's nevertheless useful for us to remind ourselves what the company invests in. And then I'll finish by talking about ESG and responsible investing, how we deal with these important issues. And finally, with the prospects and the Q1 results of the company, which were just announced earlier today. Next slide, please. Financial highlights to June 2022. This is the financial year we are reviewing. As at the year end, the net asset value per share was 33.7 pence, which is an increase of 2.12 pence per share of total shareholder value, which represents approximately 6.1% movement in the year. A tax-free dividend of 1.71 pence per share was paid to shareholders. This is 4.9% on opening NAV and in line with our policy of paying out 5% dividends to shareholders. And on top of that, the company paid a 1.5 pence tax-free special dividend, which was a result of successful exits, profitable exits in the previous year. Next slide, please. Just setting out the scene, during the year, there were lots of changes economically, politically, and in terms of everything that happened in the world. Clearly, the COVID-19 pandemic continued to be a big impact, to make a big impact on the economy, creating lots of different dislocations and supply chain problems that our portfolio companies and their own clients have to contend with. We also saw a significant repricing of public markets, especially in technology. This was towards the back end of 2021. The war in Ukraine created a significant geopolitical risk and resulted in a sharp increase in energy costs that you're all aware with. And that itself fed into increased inflation and increased interest rates, which changed the fundraising requirements for a number of technology businesses, especially those at the kind of later stage of investment who are looking to raise significantly bigger rounds than previously. So against this background of significant headwinds, the company generated a positive return, and a return that more than covered the 5% annual dividend. The portfolio showed a certain level of resilience across the three key sectors of healthcare, asset-based, and technology, general technology investments, which we're pleased with. In addition, the renewable energy investments benefited to an extent from increased energy prices, but also provided a natural hedge on inflation, because the feed-in tariffs for those investments that benefit from feed-in tariffs were uplifted in line with inflation. Next slide, please. This slide shows the track record of Crown Place VCT over different time horizons. I mentioned the 1-year return of 6.1 pence per share. Over 3 years, the company produced 6.8% per annum return, and over 5 years, 10% per annum. The 10-year return was 8.0% per annum on average. We have discussed in the past that VCT should be seen as a long-term investment, and therefore the medium to long horizon returns are the ones that shareholders should really focus on. I'd just like to make it clear that these percentages and these return values are based on the £1 investment received by the company and don't take account of any tax reliefs that the shareholders have received. Next slide, please. So against this background, let's just look a little bit more closely as to the highlights of the financial year 2022. The company benefited from a good fundraising season, raising 11.7 million of cash from shareholders. It also delivered 7.2 million of exits. This included 4.5 million of profit on cost for the investments exited. The investment rate continued to be strong. 7.7 million was invested, of which 2 million into 4 new companies and 5.7 million into the existing portfolio. And I'll come to talk later about how we invest early in companies and continue following them in later rounds. Therefore, our follow-on investments are expected to be larger than the new company investments in any given year. Share buybacks were 2.2 million, which is very much as expected given the size of the company and given previous years. And in addition, the company distributed 7.4 million of dividends back to shareholders, tax-free, including the 3.3 million of special dividend paid in November 2021. Next slide, please. Now, what were the key value drivers? The total increase in the value of the portfolio was 6.4 million, as can be seen at the bottom of this slide. The main contributors to this were the 3 investments that were exited during the period. So Credit Kudos, MedicineB, and Frazee, and I'll speak to each of them in a bit more detail in a minute. All the write-ups were spread across 38 companies, so very broadly, and contributed 5.3 million to the total. And they were offset partly by write-downs in 18 other portfolio companies. So as you can see, quite broad movements across both write-up and write-downs. Next slide, please. Now, the portfolio of Crown Place VCT is well diversified. It contains some 60 companies employing over 3,800 people, predominantly in the UK, but not exclusively in the UK. This is exactly what VCTs are meant to be funding and supporting UK companies growing fast. If you look at the sector breakdown by value, you will see that the biggest part of the net assets was the cash balance of approximately 33% at the year end, which gives the company the ability to continue supporting its portfolio, as well as finding and investing in new companies that will give returns over the longer term. Across the 3 areas of investment over the last few years, i.e. fintech, software and other technology, and healthcare. We've invested approximately half of the net assets of the companies. And then we have the somewhat residual investments that were made in previous years of renewable energy, which I mentioned a minute ago, and other, which includes a mix of some educational investors and one or two other asset-based investments. Next slide, please. On this slide, we look at the portfolio in a slightly different way, through a different angle. We look at the maturity of companies we've invested in. Typically, the Albion VCTs, and that includes Crown Place VCT, would invest at a reasonably early stage in a company and then follow through a series of rounds as those companies scale up. So you will see that when the portfolio is looked at by way of value, the early stage investments, those that we defined with revenues less than 1 million, were less than 10% of the total portfolio value. The growth stage investments, those with revenues between 1 and 5 million, represented approximately 20%. And the scale-up investments, those with 5 million or more of revenue, represented the vast majority of value, approximately 71% at the year end, and an increase from the previous year end, which is, as we would expect, as companies move from early stage to growth stage and then to scale-up stage, we expect the scale-up size of the portfolio to gradually increase. The same picture can be shown on the chart on the right, which tracks the number of employees of companies. And you will see that 55% of those companies by value have 100 employees or more. Next slide, please. So as these companies grow and mature, some of them grow faster and become bigger compared to the rest of the portfolios. And therefore, naturally, we will see some level of polarization, some level of additional weighting on the top 3 or 4 investments in the portfolio. The 3 top investments in Crown Place VCT account for 20% of the net asset value as of the year end. Of those, the biggest one is Quantexa, which is a very successful business in network analytics, used by a number of global financial services providers. Quantexa, we first backed in 2017 when it was a small company. We have invested in total approximately 1.8 million from Crown Place VCT into the company, and the book values of the year end was 10.2 million, so a significant increase. During that period, revenue grew over 30 times, and the number of employees grew from 30 to over 400. Over the years, Quantexa has raised several rounds of funding, in total approximately $240 million. However, because we backed it early and we continued to follow in subsequent rounds, Albion still owns across all of its funds in excess of 10% of the company, has a significant influence and retains a board seat. A similar picture can be seen with Provica, which we backed early on in 2012. Just under 1 million invested by Crown Place VCT is now reflected as just under 4 million of value, and the company grew from no revenue at the time of investment to 15 million plus currently. A similar picture is seen in Oviva, which we backed in 2016. The investment has approximately doubled in size in terms of its valuation. Revenue has grown 25-fold, and the company now employs in excess of 500 million people. Next slide, please. Briefly touching on the new investments made in the year, we made 4 new investments. The first 3 were of a size which is fairly standard for a late seed Series A investments, which is where we typically participate. Regulatory Genome is a smaller investment in a younger business. I will speak about the first 3 consequently in turn now in a little bit more detail. Can we have the next slide, please? So Perch Peak is a very exciting young business which helps blue chip clients to help their own employees relocate. The company started in 2012 and 2020, and since then has helped more than 5,000 people relocate across the globe. The Albion VCTs invested 3.8 million as part of an 8 million round. We led the round and we've taken a board position. Next slide, please. Big data is another very exciting business which enables pharma companies to market new treatments more effectively to their end users. It is used by over half of Europe's largest pharmaceutical companies. It's grown from 12 to 70 employees since 2021, and the Albion VCTs invested 5 million of a 10 million round. Next slide, please. Offalos is a company that some of you may have seen presented our shareholder event last week. It is a company that has developed technology which enables large blue chip clients of theirs to personalize their approach to debt collection. The business is significantly outperforming other debt collection agencies on recovery rates, which gives them the ability to collect more than 100% more of the debts outstanding from customers, and also gives the customers a much better experience in this whole debt collections and arrears process. Its clients currently include mostly some of the largest energy retailers in the UK, but it's also opening up and exploring this technology in new verticals. The Albion VCTs invested 3.2 million of a 5 million round. Next slide, please. As we mentioned, we expect to continue investing in our portfolio in a number of rounds, and we contributed 5.7 million to follow-on rounds for a number of investments, the top three of which include Oviva, Transfig, and Speechmatics. Oviva is a technology company that works in the medical space, in particularly the medical nutritional therapy space. Transfig provides connectivity between financial institutions and their trading venues. And Speechmatics, a company that also presented at our shareholding event, is a company that has the most accurate speech-to-text technology in the market, covering over 30 languages with better accuracy and better resolution than its competitors. Next slide, please. We had realizations during the year. One of them, Credit Kudos, was a very good exit. The company was acquired by Apple. The Albion VCTs invested 3 million 2 years ago. We didn't expect to exit so early, but this is just a testament on how some of our companies are seen as core assets by some of the larger technology players. And in this particular case, Apple saw Credit Kudos as core to their strategy to offer financial services in the UK. The return on cost achieved was 5.2 times, and the Crown Place VCT received 2.4 million of proceeds on the exit. Next slide, please. Frazee was another company that we exited during the year. Frazee provides brand optimized language using generative machine learning models and processes, in essence, creating the best possible text for brands to use in their marketing campaigns. It was acquired by a growth capital fund called Capital D. The Albion funds invested 4 million 3.5 years ago, and the return on cost was 3.5 times. Crown Place received 2.2 million in terms of proceeds from the sale. Next slide, please. Finally, MedicineB, which is a software system sold to pharma companies to help them understand adverse effects from the users of their treatments. Crown Place received 1.5 million of proceeds on the sale of this investment. The return on cost was 3.4 times, and we've had it for a rather long period of time, approximately 9 years. Next slide, please. Now let's just briefly touch on the investment strategy. Our investment strategy hasn't changed in the last year, but it'll be useful for us to remind ourselves what the fund and the company invest in. We invest from Series C, from seed to Series B stage. This is companies typically with less than £1 million of revenue to more than £5 million of revenue. We back long-term trends, which means we invest in growing markets and where we see technology coming in and creating value over the long time. We focus on business-to-business software, products and services. We deliberately do not invest in consumer-facing businesses, other than the absolute exceptions. Our history, our background and our understanding is very much in the business-to-business space. And we invest in two separate sectors. One is software and enabling technologies, and the other one is healthcare, again, from very much with a technology angle into healthcare. We invest early and we work with companies to enable them to scale up by adding significant value to their own journey as they scale up. How do we do that? Next slide, please. In addition to our investment team's expertise and experience when we join the boards of companies that we work with, we also have invested heavily into what we call our growth platform. Our growth platform is a group of colleagues who work with companies very closely to help them scale up. It's led by Jen Reddin, a partner at Albion, who works with her colleagues to coach founders to become leaders, to help them hire executive level talent, to help them develop cohesive leadership teams, all absolutely fundamental to the successful growth of businesses. We also give advice on go-to-market strategies and how to execute on these strategies, and work very closely with the companies to ensure financial discipline and help them in future fundraising rounds. Next slide, please. I would like to briefly touch on methodology and ESG and responsible investing. We are signatories to the Principles for Responsible Investment, PRI. We are also signatory to the Investing in Women Code. All of our processes have ESG as a core consideration in them. Next slide, please. As you can see on this chart, and I won't cover it in much detail, but as you can see on this chart, we use ESG considerations at every stage of our process, from screening the due diligence of companies prior to investment, and then work with them during the monitoring stage, where we have significant influence on these companies to ensure that they factor in ESG as part of their strategies and business plans. Next slide, please. Within Albion itself, we spend a lot of time and effort in making sure that our business is also at the forefront of the ESG thinking. Specifically, we spend a lot of time and effort making sure that there is an increase in diversity and inclusion within the VC sector. As many of you would know, the VC sector is still very much dominated by males and white males, and we're looking to change that over time. We work with not-for-profit organizations such as Future VC and Fairlight HQ to make sure that we have a more representative talent across the industry. We offer internships within Albion for people who would not normally consider venture as a career choice. And we work within the rest of the industry to elevate the issue, educate, and make sure we attract better talent over the years. Next slide, please. Let me just briefly touch on the prospects of the company going forward. Of course, the macroeconomic and geopolitical uncertainties remain pretty elevated in the current climate. But having said that, we believe that we have a very well-balanced portfolio, both by sector and stage of maturity. All of that, of course, within the VCT framework and what VCT companies are able to invest in. The asset-backed portfolio gives a level of resilience, particularly the renewable energy sector. And we also focus on mission-critical products and services, which are difficult for customers to replace. We invest in must-have products rather than nice-to-have products, and that gives some degree of resilience to our portfolio companies going forward. We have consciously very limited exposure to discretionary consumer-facing sectors, and that we expect to remain the case for the foreseeable future. We are seeing a very strong pipeline of new and further investments. As you would note in the Q1 statement that was just published earlier today, we made 4 new investments in 4 new companies in the 3-month period that we reported on. We expect to see reduced M&A activity. We can talk more about that, but we do not anticipate any significant exits over the next 12 months, just because of what we see in the marketplace and the reduced appetite for M&A by large acquirers and growth funds. Next slide, please. I mentioned that the Q1 results were published earlier today. The NAV as of 30th of September 2022 was 33.77 pence. This is a small increase of 0.2% for the quarter. 3.6 million of new investments were made in 4 new investments and 4 follow-on investments. Therefore, we continue with a very busy investment program. The first dividend of 0.84 pence per share is to be paid in 2 days' time on the 30th of November. This is in line with our 5% annual dividend distribution policy. The first allotment under the Albion VCT top-up offers, which are open for investment and are currently being taken up very well, is due to be on the 2nd of December 2022. And finally, if I may just touch on shareholder events and relations. Virtual AGMs have become the norm for the Albion funds over the last 2 years. We find a lot more people engage with us when we do this format virtually. A lot of people come back and watch the presentations and videos subsequently to the actual day of the AGM, which gives us a better level of engagement with shareholders. But we do find a lot of benefit in meeting shareholders face to face, and we know that many shareholders would like to meet the Albion team and some of the companies that they've invested in. So we organize annual shareholder seminars, and the last one took place last week. It had the highest ever turnout in the Royal College of Surgeons. We've had lots of feedback, and we believe that most shareholders enjoyed it. Therefore, we urge you to come and attend the next shareholder seminar, speak to us, speak to our investee companies, and hopefully you get a better understanding of what your money is invested in. This is all I have for you today, and with this I'll pass back to the chair, Penny Freer.
Thank you, Emil. I'm now going to go through some questions that have been received through the Lumi platform, and if there are any more, please feel free to put them up on the platform. So Will, Emil, you just mentioned about the seminar last week. Perhaps you can just say a little bit more about that and what you felt was particularly successful, and then also share with our shareholders when we plan to do the next one. Will, I don't know if you want to take that.
No, thanks, Penny. So to add a bit more colour to Emil's sort of summary just now, we were very pleased actually with the event. I think it went well. I reckon there were the best part of 300 people, 300 shareholders there. So clearly the pandemic is over and people are out and about again. In terms of timing, I think it worked well having it sort of end of November. So subject to this stage, I would imagine we would do the same next year. I think what worked well in the format was, as well as having an economist speaking to us, we were able to have our 2 investee companies, as well as my end of year report. And then what was new this year was that we actually ran 2 breakout sessions, and they were run as panels. And it was fantastic to have 2 of the non-executive directors of this fund, Ian and Pam, Pam chaired the healthcare one, and Ian chaired the fintech one. And basically they were small breakouts. They were run as effectively a panel discussion. So I think that's great. And also the other big opportunity that the seminar gives you is the opportunity to ask Q&A in a public forum. And we had some great questions, followed by the Albion's classic lunch with maybe a glass or 2 of wine to help. So all in all, that went well. And I think by focusing a lot of effort on that, we can make that an ever better event. And that sort of plays to our broader strategy on AGMs, which is where we are going to stick to doing them virtually, as indeed this one is. And the reason for that is that we're finding that not only do we get people dialing in as today, but actually we're seeing a very large number of shareholders and I would suspect potential shareholders looking to view it in the coming days and weeks following it. And it can run into hundreds of people. So we see in aggregate far greater engagement with shareholders than we did previously, where we had short AGM events with a physical attendance.
That's great. Thanks, Will. Emil, you mentioned about M&A activity and decline in M&A activity. Can you just share with us a little bit more around your thoughts on the outlook for exits within the portfolio in the context of the market that you alluded to in your presentation?
Yes, thank you. It's very difficult to predict how the M&A market will develop over the next 12 months, and I'm not going to try to do that. But what we're seeing in the marketplace at the moment is that it is becoming harder to exit investments, especially when they're early stage. They need to prove themselves first. They need to grow to a sizable, large scale before they actually become attractive to potential acquirers. And therefore, what we're seeing right now and what we expect to happen over the next 12 months is reduced appetite from acquirers, partly because their own businesses are currently in many cases affected by significant uncertainty and significant risks. So in this kind of climate, to be going out and buying new, younger, fast-growing businesses, it's hard for a lot of them. So we are not really banking on or forecasting any significant sales from the portfolio. We will continue working with our companies to help them scale up, prove themselves, establish defensible and strong positions in their own markets. And you know, as a lot of people have commented in the past, you know, companies don't get sold, they got bought. So we're working with our companies to make sure that they are positioned in the right place and being able to create significant value for potential acquirers, and those exits will materialize over time.
Thanks, Emil. And Will, just one final question for you, actually. Can you comment on the impact of the budget, the recent budget, recent pronouncements from the government on the VCT sector in general?
Yes, absolutely. So obviously, autumn statement was recently happened. So I'm going to pick a sort of a positive and a less positive to give the sort of flavour of what was going on. Starting with the positive, we had confirmation in the booklet that supports the autumn statement that the VCT scheme is going to be extended beyond what was a sunset clause in 2025. So that was good news. That shows real commitment by this government to supporting young, innovative, growing companies using the VCT scheme as a way of doing that. What we now are doing is working with Treasury to understand how long that extension will be for, and there'll be more on that in due course. So that was on the positive. Also within the statement was an announcement with regards to our research and development tax credits. So this is where companies that have R&D spend are able to get a tax rebate that is linked to the level of R&D spend. The government has confirmed that it's still very committed to R&D in aggregate, but is looking at how it directs its contribution in different ways. And what they chose to do here was to reduce the amount that can be reclaimed by smaller companies. So they reduced the percentage refund. So that will have an impact on our R&D companies because it will reduce the effective cash rebate that they receive. There is still a rebate, it'll just be lower, and we will have to make sure that our companies are factoring that in when they're looking at their cash flows. And that in turn is likely to mean that we may need to support companies to a larger extent than we might otherwise. On the positive, as you will have seen from Emil's slide when he looked at the construct of the portfolio, this company has good cash levels and is able to provide that support as and when needed.
Thanks, Will. Thank you both, Will and Emil. We're now going to continue with the formal business of the AGM. Full text of each of the resolutions was set out in the notice of the meeting, and the board is recommending members to vote in favour of all the resolutions. I will briefly summarise these resolutions. Number 1, the first resolution is to receive and adopt the company's accounts for the year ended 30th of June 2022, together with the strategic report and the reports of the directors and the auditor. Number 2, the second resolution is to approve the directors' remuneration report for the year ended 30th of June 2022. The third resolution is my own re-election as director of the company. The fourth resolution is the re-election of James Agnew as the director of the company. The fifth resolution is the re-election of Pam Garside as the director of the company. And the sixth resolution is the re-election of Ian Spence as the director of the company. The seventh resolution is the reappointment of BDO as auditor of the company to hold office from the conclusion of this meeting to the conclusion of the next meeting on which the accounts are to be laid before you. The eighth resolution is to authorise the directors to agree the auditor's remuneration, and the ninth resolution is to allow the directors to allot shares. The 10th resolution is a special resolution that will give the directors the power to disapply pre-emption rights, and the final resolution, which again is a special resolution, is to authorise the company to make one or more market purchases, ordinary shares in the capital of the company. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the meeting through an RNS announcement and also published on Albion's website as soon as reasonably practicable. For those members that have cast their vote, I confirm that the poll is now concluded and I declare the poll closed. In the meantime, I will show on the screen the current proxy votes that have been received by Computershare, and as you will see, the proxy votes are comfortably in favour of all the proposed resolutions. Thank you. That concludes the formal business of the AGM. I'd like to thank all members who've joined this webcast for the AGM, and the board always welcomes any feedback you may have, which you can do by sending an email to me at crownchair@albion.capital. For those of you who are interested in seeing the recording of the AGM, this will be available within a couple of days on the Albion Capital website. There being no further business, I declare the meeting closed, and on behalf of all the board, I do hope you all stay safe and well. Thank you very much for attending.